All right, ladies and gentlemen, I hope you had a wonderful day. We started off the first trading day of October, but man, there was a lot to digest. It may not look like the market did much. We went a little lower than Friday, but man, if you saw the bonds, TLT, IEF, SHI, 2-year, 10-year, 5-year, 30-year, they all started hitting new highs. Even overseas, same thing with the gilts. The dollar hit a new high so far on the year, and this was pretty wild considering that last week, we were hoping for some rate stabilization, but we came out the gates with none of that today. So I have a breakdown. There was a lot of action today with the ISM. We have data tomorrow, 30 minutes after the bell. So whatever you saw today, like I'm showing you, the market did not move much, but the bonds and dollar did. We may see a bigger move tomorrow at either gap up, gap down, but realistically, that data tomorrow, the job openings, we may start to move after there. But we have to talk about that. I have to re-go over the catalyst vacuum. I'm going to show you the whole calendar. I'll even go over the jobs report with you. And then we have to talk about the seasonality of October. So drop your thumbs up on the video. Make sure you're subscribed. If you don't know, we're live Monday through Friday, 30 minutes before open, youtube.com/thestockmarket. But what I want you to see here is the thing that we talked about yesterday and what I was bringing up with October. Like I'm saying, October, you're about to hear, I'm about to give you everything. October is a really good month. And even though there's a lot of seasonality, just like last year, October, even though the month is good, it doesn't have to start off good. And like I was saying yesterday, if there is still any more selling pressure out of September, you could watch that feed through to the first couple of weeks of October. Again, October here, I think you had that little pop and drop, but October was a great month last year if you look at it at the numbers, but it wasn't like easy when you're looking at it. So hopefully that helps you out. But now let's talk about the seasonality of October. Believe it or not, October, November, and December have historically been the 3 best months of the year for the market, and over the last 20 years, the Dow Jones has had an average monthly gain of 1% or more each October, November, and December, with positive returns 65%, 75%, and 65% of the time. So what that means is October, you have a 65% chance of going up, November, 70%, December, 65%. They said, in addition, the last 3 times the S&P lost at least 1% into August and September, it bounced in October, rallying 8% in 2022, 8.3% in 2015, and 11% in 2011. Again, those were the months where you had in August and September of below 1% like we just experienced. So to top it all off, the S&P has been higher in October in 9 of the 10 times where it has lost 1% in August and September. And when the SPX is up 10% year-to-date into quarter 4, it has been higher 12 of the last 13 times with an average gain of 6%. So add that to the oversold conditions, how much we have sold off. This is why people are liking the bounce, and I agree with it. However, I think the data is going to drive it all. If we get a poop sandwich from all of the data and it's not good, then we are going to have a problem. I don't know if this will materialize, but at the same time, we also could go a little lower before you watch October get crazy, but that's going to be as a result of the CPI and then earnings. So we're going to talk about that, but first, let's get into tomorrow. I guess we actually even need to go over what happened today. You had the ISM manufacturing. It was a beat. It was the highest since November. The prices paid came down, and people really like that today. That was a good part, especially right when the order numbers came in. But then the employment factor, that actually started to go back up, so that one wasn't good. You had construction spending. That came in line. Powell and Harker, they both said nothing. Michelle Bowman, she reiterated support for more rate hikes. Fed Barr sounded more dovish, and and he pretty much just said the Fed is at a place where they could proceed cautiously. And then even for October, you're going to get a lot of headlines regarding slowing consumer and all of that. But the thing I wanted to show you now is tomorrow, because we talked about this a lot today. If you look, the market didn't move much, but bonds in the dollar did. So if there's going to be a big move, it'll probably be a result after 30 minutes after the bell. Fed Bostic might say something, maybe the Red Book, but last month, the JOLTS jobs opening, this had a big effect. So I brought this up yesterday, how to simplify it tomorrow morning. Watch the trend. You don't need to really know the numbers too much, because really all that matters is if there is a more than one standard deviation beat. Pretty much in this case, look for a 1 million above, 1 million below. The consensus tomorrow is 8.8 million job openings, 7.8, 9.8, a million above or below. That's going to be a crazy response on the bonds. Everything else, leave it up to the market to figure out. But also, the bond market is sensitive, so we'll see how that factors into it all. Oh, and hopefully you can see, I don't know, but you could go to Trading Economics and you'll get it here. But the other thing you need to be watching for is just the chart. Just watch for the trend. If that goes down, that's both good and bad. Remember, if it does go down, this is the job market tightening up. That's what people in the Fed want to see if they are going to start calming down with rate policy. That means TLT and the bonds can stop dying. So if that number drops and drops big, that could end up being good because the bonds could react to it. Who knows what equities are going to do, but I'm really talking in terms of bonds, and that's how you should be looking at it tomorrow, because if you try to figure out what this is going to do to the market, it starts to get a little weird because both good and bad could produce all sorts of reactions on equities. But if you really want to simplify tomorrow, watch the trend, watch a million above or below. But now, what affects the bonds? This number goes down, that would be good for the bonds. If that number goes up, that will be bad for the bonds, simply because that means, well, the job market's good and you could justify these higher rates, and maybe the long end of the curve and everything else has a lot more marching up to do. So that's why tomorrow is going to be important. I think that will dictate whether or not the market is going to catch up to dollar or the bonds tomorrow. Maybe we have another day of waiting, but that's the main thing. And now here's the final thing. We kept talking about this today, and I really hope everybody gets it, but we brought up a catalyst vacuum up until October 12th, October 13th. And if you don't know what I'm saying, is that there's a lot of events even this week, and they are important, but even like today, they could cause a reaction on bonds, maybe not much on the markets. And the thing you have to realize is there's no real meaningful movement or data until after October 12th. Why? What is that? October 12th is going to be the CPI. Now, granted, you go through the calendar, you're going to see a lot. Even this week, we have ISM services. That's going to all be important, and it's all about two standard deviation misses or not. And if that doesn't make any sense to you, you need a big beat or miss. If you're watching everything coming at consensus, that's where it's going to leave us in this vacuum where we trade with the momentum and we're kind of moving here and there. But the main point is, and what I'm trying to show you with this calendar is, if you think the market's going to crash or it's going to rally and people are going to make that decision this week, even up until next week, it's just not going to happen, because we have events coming up where people now can really make that decision, like right after earnings, right after CPI. If you really want to sell this off, you're going to wait for that confirmation. And if you really want to buy it up, that could also be your confirmation as well. So like I'm saying, up until Friday, maybe we get an event like the non-farms that shows us something surprising. But if we don't, go into next week, you're going to get PPI, you're going to get the FOMC minutes, you're going to get core inflation there. That's the CPI, but where's the other one? Then consumer sentiment, couple of China data. But after this week now, this kicks off earnings. You're going to hear from the banks. You're going to hear from Netflix. And then now that will be enough information to say, okay, nah, let's dump this coming into the end of the year. Let's make October kind of on the negative side of history, or you'll watch those seasonal factors start to take over. So that's the way I'm feeling about all of it. Maybe I could be wrong, so we'll see how it all ends up playing out. But I really do think this is going to be a wild month with a lot of opportunity, and ultimately just leading us into a year that may have a lot more importance. So Let us get into the plays. So, right off the bat, now that we got that out of the way, I got a couple plays. I'm going to start with one I did. I know I don't want to make these trades. I keep getting suckered into it, but I like it because it's IPO, and recently we saw it, and if there is a bounce, I do want faith in an IPO getting some of that steam, and I went with CART. I meant to do 500 shares. I got double filled. I canceled the order. By the time it really canceled, it failed and all that. So I walked away with 1,000 shares. 27.10 is my price. Why I went with that? Because the lowest priced offering on September 11th when CART announced the pricing, it was like $26 to $28. Then they raised it like 30 to 30 and change, and then it opened up as high as it did. So by now, it's kind of meeting criteria. It's traded the float. It did all of it in that first 5-10 minutes, but now it is much cheaper. So I'm figuring if we do get upsides, this one is definitely a more speculative play. I don't know where the downside is. I think it could go maybe as low as $18, but for the most part, I'm looking, I think 26 will act as a level of support, and then we'll go from there. But I'm going to look to flip it. Think it could be a decent trade, but like I'm saying with flip, I may want to swing it in that sense too. So maybe I shouldn't call it a flip. Maybe a swing, just because I am trying to link it up to some of the seasonality here, but I could pick the wrong one. So watch out for that. But that is play number one. CART. Play number two now, we're going to biotech land. And this was one I made on Friday. I forgot to bring this up. Some of you remembered. It already went up too much, so be careful. But GPCR, I only have 50 shares of it. They had data of a GLP-1 drug. GLP-1, that is literally Ozempic. NVO, they had news today. They got approval of a new drug, and then that like Ozempic competitors in Europe got denied. So they started moving up. But watch out for these. Even in that same respect, we brought up Biogen yesterday, and then Pfizer, they were starting to bounce up here a little bit. So healthcare, I would watch out for it. I mean, right now, as far as like rotations, everything else, if you didn't see utilities, NEE cut their dividend, and in general, utilities now with whether it's stagflation, recession, not recession, I mean, just what the utilities are showing is just very, very awful. And I think that's a kind of a reflection of where we're at and kind of waiting to find more. But like I'm saying, you can't see any real signs of rotation. Sometimes healthcare is going up, banks, everything kind of just looks like it's getting drained except for the Magnificent Seven. So that's why we're waiting for earnings to either kill them or keep that going. But those are the first two plays. As far as play number three, nothing crazy. Just thought I'd bring it up again tomorrow. For the long term, my deposit did not come in today. I think it takes an extra day. It's like the Kevin Hart thing. I don't want to talk about it, but Altria, it's one that I like. Disney, again, I'm literally debating between Altria and Disney. I do like Walgreens, but I don't like that it popped up 5% the other day, and then it quickly loses 5%, so maybe that's lower on the list. And even now, coming into the deposit, Pfizer, they've already popped up there. I'm barely down on that since we got it, so the way I'm looking at it, it's probably either going to be Disney or Altria, and if I don't want to buy it tomorrow, then I'll just wait if I want to grab something else. So I don't have any cash in the long term. This will be, we're going to get the deposit and use it, and that's what I'm saying. Maybe I'll hold on to it, but I have been eyeing these for a while, so we'll see how it plays out. But that is going to be everything else. I think it should be straightforward with the data, but like I told you, man, are the rates going to stabilize or not? Because it's getting pretty wild, and mix that in with the dollar, where we're headed to the end of the year. That's going to be the main story, so I hope you're ready. But that is your watch list, ladies and gentlemen. Make sure Hydrate Healthy ready to go. Make sure post your watch list. Make sure we see you there in the morning. I need the armor on. I need the helmet shining, and I need you to remember to take it easy. Whether you're doing good or bad, it does not mean you can't beat up on yourself. So my brother, you better take it not too seriously, but enough seriousness to be in the game. But make sure you got that woosah, that vibe, amor fati, do not worry. But remember, the mentality goes a long way, ladies and gentlemen. So stay locked in, keep that armor on, and we'll see you in the morning. And God bless you. I'll see you, Horn. Horn, you can't even see the awkwardness. Bye.